Meet Kevin is plundering the investors of HouseHack for personal profit. In this presentation, I'm going to expose some very concerning transactions going on in the HouseHack Incorporated business, owned by Kevin Helmut Pathrath, also known as Meet Kevin, the Turbo Clown on YouTube. First, this organization is overpaying by an exorbitant amount totally unqualified employees. The shareholders are contributing cash to this business, and that cash is being used to compensate some very questionably qualified employees. What we have here is McKay Thomason, one of Kevin's little sycophants and fluffers. McKay is the chief operating officer of HouseHack Incorporated, and he is 25 years old. His age does not necessarily disqualify him, but we need to read about his qualifications a little bit more now, don't we? McKay's background includes a 2-year mission in Chile, where he led teams and became fluent in Spanish. Skills that have served him well in real estate, evidenced by successful property flips. Prior to joining HouseHack, Mr. Thomason refined his business acumen at a sales and marketing startup. You're looking at a child that is fresh out of college, and his claim to fame is that he went to Chile and learned Spanish, and then he basically interned at a sales and marketing startup. Do you want to know how much McKay Thomason was paid in 2024? This young child was paid $244,226 in cash compensation and an additional $90,000 in other compensation, I suspect stock, for a total compensation of $355,184. Meet Kevin's HouseHack Incorporated is paying a 25-year-old with no experience except an internship at a sales and marketing startup, $355,000 a year. How do you feel about that, investors in HouseHack? Do you think that's a reasonable salary for a child with basically no qualifications? It's up to debate. Next, Meet Kevin Pathrath is personally enriching himself by selling properties that he personally owns to HouseHack. Meet Kevin bought a house. He started HouseHack. He sold that house at a profit to HouseHack, pocketing the difference for himself. And this is a snapshot of the property. So let's read this text blurb, and I want to just think carefully about how this makes you feel. On September 18th, 2024, the company's board of directors informally met via telephone and discussed purchasing a multi-unit apartment building from our CEO, Kevin Pathrath. I guess they just found a wedge deal. Mr. Pathrath was absent from the meeting given his conflict of interest with the discussion and the vote. So out of all the properties in California that are supposedly wedge deals, they identified one of Kevin's own homes as a viable purchase for the business that you, the investors, are financing. Interesting. After review of independent appraisal reports, regarding the subject property, the board agreed to purchase the property so long as Mr. Pathrath agreed to sell the property at a rate lower than the fair market value of the property, such that would be proportional to the normal rates the company would expect when purchasing the property had Mr. Pathrath not been involved in the transaction. Basically, what that's saying is, because Kevin is such a genius, he would have potentially got this property at a lower rate than fair market value. So we're going to just assume that we're going to buy it at the same rate that Meet Kevin would have if it wasn't his property at all. An independent appraisal report found the property to be worth approximately $1.85 million. Independent by who? Mr. Pathrath agreed to sell the property to the company for $1.6 million. And the property subsequently entered to enclosed escrow on the property a few weeks later. me, Kevin, sold one of his personal properties for profit and determined the sales price based on an independent but unverifiable appraisal report. Let's dig a little bit deeper. And you cannot make this up, okay? So this is the property transactions, okay? Me, Kevin, initially purchased it for $1.26 million, September 2020. And 4 years later, he sold it for $1.6 million to HouseHack. You, the investors, purchased Meet Kevin's home at a profit based on an appraisal that was quote-unquote independent. Let's look at the ownership history. So from the bottom up, we see there's Kevin Pathrath. And then we see a transfer to an LLC called Really Toxic Assets, LLC. That is Kevin's LLC. He named his LLC Really Toxic Assets. Transfer the property to that LLC. And then the LLC, Really Toxic Assets, I want to emphasize this, sold the property to HouseHack. How do you feel about this, investors? HouseHack bought a property from an LLC called Really Toxic Assets, owned by Kevin Pathrath. But trust me, the independent appraisal said it was worth $1.8 million. And, if he pocketed a couple $100,000 of profit, that's neither here nor there. Interesting. Next, paying Kevin for rent. So HouseHack is renting from an independent property. No, they're renting from me, Kevin. So money is being transferred from HouseHack to Meet Kevin for rent for office space. Let's see how much. In July 2023, the company entered into a lease agreement with an entity that is controlled by its founder and CEO, Kevin Pathrath. Oh, how convenient. They found office space and it just happened to be owned by Kevin. For a monthly base rent of $6,000. So HouseHack, you the investor, are directly paying Meet Kevin $72,000 a year for rent. I wonder if there was any bias here, or they just happened to find an amazing opportunity that just so happened to be owned by Meet Kevin. Interesting. And next we have our hero, Gerber baby, Ross Gerber. Ross Gerber, one of Kevin's buddies, is a member of the company's board of directors. Okay, so he's supposed to be, elected by the shareholders and supposed to be watching out for the rights of the shareholders. But also, enriched himself a little bit from this. Owns 36% of Gerber Kawasaki Incorporated, a retail investment firm that provided the company with investment services during 2023 to manage treasury bill investments. So HouseHack is paying Gerber baby to buy T-bills. I guess the V-bill ETF was too difficult to purchase. Okay. Mr. Gerber received customary fees for those trading activities. So HouseHack investors are paying one of the members of the board who is managing the treasuries of the company. He's making money from the company. The trading services terminated December 2023. Beginning January 1st, Mr. Gerber began providing monthly financial statement review services and net asset value evaluations, and is compensated at the monthly rate of $5,000. So number one, I don't know if he's a CPA or not. Maybe he is. But he's getting paid $5,000 to review the financial statements when this was actually, audited by an independent auditor. So what exactly is he doing with the financial statements? And then he's providing net asset value evaluations. Is he the one determining the value of the company? Because Kevin always quotes the value of HouseHack. Oh, this is the value of HouseHack. It's worth more than the book value. Well, why is one of the members of the board of directors doing that? And he's getting paid $5,000 a month to do so. That's a little concerning to me. Is this the independent guy that's reviewing the value of HouseHack? I don't see any conflicts of interest here. And then, of course, we have the creme de la creme. Free stock for Kevin. Kevin gets free stock you have to pay. In August of 2022, the company was to issue 100,000 shares of voting emphasis on voting, he only has the voting stock. Nobody else can vote except Kevin. To Kevin Pathrath, our founder and CEO, for $100,000 of consideration. Kevin was supposed to pay $100,000 for $100,000 of voting common stock. This was subsequently increased to 1 million shares of voting stock, for which the company entered into a promissory note agreement with its founder for $1 million. So Mr. Richie Rich Kevin could not afford to purchase the stock outright for $1 million. Remember, he said he was pledging his own money? He had some skin in the game? No, he actually entered into a promissory note agreement, which means he owed the money to HouseHack. He owed $1 million to HouseHack for the stock, and he received the stock anyway. But he's going to pay it back, right? Let's keep going. Through December 31st, 2023, Kevin Pathrath, our founder and CEO, has paid $75,000 towards the note. Additionally, the founder has advanced $172,000 in organization costs on behalf of the company, which offset the note. So total, Kevin paid $247,751 to HouseHack for principal and for advancing organizational costs. Okay? That's not $1 million now, is it? So I guess he still owes money to HouseHack, you, the shareholders, right? I mean, you had to pay for the stock. I guess Kevin has to as well. He's got skin in the game. He's pledged his personal assets, right? On December 27, 2024, the company, as authorized by the board, considered the services and leadership Mr. Pathrath continues to provide to the company and determined to forgive all amounts due to it from Mr. Pathrath. So the company had a receivable. It was owed money. That was an asset of the business, of the corporation. And you were a partial owner of that asset as a partial owner of this business. And all of a sudden, they just decided to forgive it. Oh, Kevin, you don't have to pay for the stock that we gave you, the voting stock, the only voting stock. The amount of $752,249 was forgiven, along with interest of $68,268. The total amount of $800,517 was included within other operating expenses in the statement of operations and comprehensive loss. HouseHack basically just wrote off $800,000 that was owed to it because they just considered the leadership of Mr. Pathrath. So you, the investor, who is a partial owner of that receivable, in which Kevin was given the only voting stock, you just took the loss. You ate the loss, and Kevin got free stock. That's pretty dirty, don't you think? Don't you think that's a little corrupt and disgusting? After he said so many times that he's in it just like you. He's going to invest this amount of money. No, he didn't. They forgave the debt. And last but not least, I am predicting HouseHack will begin paying for Meet Kevin's jet. I am predicting this. 100% going to happen. But it hasn't happened yet as of December 31st, 2024. Let's see what happens in the future. Pay for my plane, bro. Additionally, to date, Mr. Pathrath has provided the use of his private plane to the company without any reimbursement for travel or operating costs. However, this may be subject to change in the future. So number one, the profits, the massive losses of this business are actually understated because the expenses are understated, because Meet Kevin is subsidizing this business, which would probably not be viable at all were it not for him not charging the business for his jet for a huge freaking amount. At some point in the future, I suspect Meet Kevin is going to start billing HouseHack for the use of the jet. How do you feel about this, everybody? Going through all the things we just discussed, all the money that seems to be flowing to Kevin from the business. Remember, everything that is paid to Kevin and his cronies is from you. It is your capital that you invested. You are loaning Kevin money. And it's all going to him. Even if the business goes bankrupt, guess what? He's still made out like a frickin' bandit because he's getting paid from the corporation. Just something to think about. Like, subscribe, check out the pinned comment. Hopefully you enjoyed the video. I highly suggest not investing in house hack, but if you choose to do so, I wish you the best.